Welcome back to World Crisis Radio. Webster Tarpley here in Washington, D.C. So, the great fear leading then to a flight out of Spain and out of Italy in the middle of the summer when all these Europeans, lucky them, are on vacation. Merkel was on vacation. Sarkozy was on vacation. Zapatero was about to go on vacation, and on and on. This combination, the flight out of Spain and Italy into Swiss, German, Japanese bonds, plus these other things, the end of QE2, the stimulus ending, and the insanity of austerity being practiced across much of Europe, this set the stage then. And, of course, at that point, the speculators come in with credit default swaps. That's the weapon, because that multiplies the explosive power of the speculative funds that they have. And they, of course, use their media in order to do this. So by Monday, Tuesday of this week, it's clear we were already in a big crisis. And the developments here in the U.S. stock market, right? On Monday, it was down 635. On Tuesday, it was up 430. On Wednesday, it was down 520. On Thursday, it was up 423. The down days are European banks dumping U.S. shares, raising liquidity. Banks that are approaching bankruptcy do everything to raise liquidity. Another reflection, the oil price falling. It proves to you how much of that oil price is pure speculation. Because when the banks are about to go bankrupt and they've got to sell the contracts that they had been buying, the long speculation a la hausse that they've been doing on oil, then you see the price gets down to something a little bit more recognizable, although still way too high. On Monday afternoon, and then again on Wednesday afternoon, we saw evidence of heavy plunge protection team. And I think it was the Wednesday afternoon, in the last hour, the plunge protection team came in big time and basically jacked up the market by 600 points. The PPT, otherwise known as the President's Working Group on Financial Markets, founded by Nick Brady back in 1988-89. I'm the first one to have written about it in the original Bush biography, George H.W. Bush, the unauthorized biography. The Brady System of Drug Markets, it's all in there. Grows out of the study made in the Reagan administration after the crash of 1987. It's got to do with using options and futures in Chicago to updraft the stocks in New York, and of course it's much more complicated and sophisticated now. So by Tuesday, Wednesday, it's clear we've got a big crisis, and the detonator is the S&P attack on the United States, but it also then plays into the existing European banking crisis carefully created by the hedge funds since the end of 2009 with the Dubai crisis. So once you've got Greece, Portugal, and Ireland getting a bailout from the European Union, specifically from the European Financial Stability Fund, EFSF, then who do you attack? Well, you move up and you attack Spain and Italy. Once you've got them under attack in a crisis of great fear, when the United States has been downgraded and everybody's looking at the list of other AAA countries, France stands out. France is a country that can be attacked, and this is what happened then. After the attack on Italy, beginning on the 11th of July, just about a month later, France comes under attack. And this is done using the tried and true method of misleading, exaggerated, or simply invented newspaper reporting. For example, you can go to the Le Monde website and you will see a tweet put out by The Guardian, the London Guardian, based on Reuters. Will SocGen do a Lehman? In other words, is the French bank Société Générale about to blow? Are they bankrupt? Are they on the verge of declaring insolvency? And then at the same time, on the same afternoon, a little bit later, the Alphaville commentary of the Financial Times, also online, SocGen reported to be selling gold below spot. So they're selling gold at a price which is lower than what you should be able to get in the immediate market. These two things together focus tremendous negative attention on French stocks bank stocks in particular. Not only was Société Générale way down, but Crédit Agricole hit hard by the same wave. And BNP Paribas also hit hard. So was there going to be a downgrade of France? Were they going to be reduced from AAA to AA or AA plus? Were one or more of the French banks on the verge of bankruptcy? Now, again, the merit of the question of their solvency is a different one. This is now a question of, does this going to happen in an orderly way, or is it going to happen in a chaotic way according to a timetable determined by sharks and speculators and other predators? Because that is what that seems to be what the Financial Times preferred. Remember last year, at a critical moment for the euro, you'll remember that our dear friends at the Financial Times and other British organs were putting out reports about China selling euros, and it turned out no, it was not China selling euros, but China was actually buying euros. So this was wrong, but the intent was clear, to provoke a panic and to unleash a response. Now, you remember, I think it's in Galbraith's book on the Great Crash, he talks about how a pool used to work, right? They'd get a couple of hotel rooms in 1928 or 1929, lots of press contacts. They'd start buying and selling a stock, churning it, putting out misleading press reports, drive it way up, sell it all, get out, let the suckers buy it, and then when it came down, the suckers would get the losses. So it's something similar. Today we have hedge funds in a panic mode. We've got a whole series of banks. Let's look at it. The world economy is looking bad. Don't let me say it. I've said it now for a couple of years. Meredith Whitney appeared on CNBC. This is a Wall Street consultant. She says that the U.S. banks are zombie banks, and they're uninvestable. And her list seems to include Bank of America, J.P. Morgan, perhaps, maybe on other lists, Citibank, Morgan Stanley. Of course, in terms of the smaller institutions, Paulson and Company, the hedge fund, heavily reported in trouble. We've got, I think, here we go, the Wall Street Journal, as stocks slide, investors scramble. John Paulson and Company down 9% in August. A couple of the Paulson funds have gone down as much as 20%. One of the other funds somewhat less than that. Genworth Financial also considered to be in trouble. Here's a dramatic one that you might not have heard of. MBIA. This was important back in these horrible days of 2008. MBIA is a bond insurer, and MBIA was down, I believe, on Wednesday or Thursday, 89%. They lost 89% of their value on derivatives losses. I mean, of their stock price, their value. Value is a different story, but of their stock price. So look at all these U.S. banks. Where's the new Lehman? Well, take your pick. On the German side, Commerzbank, we've been talking about them, not looking too good. Chart looks pretty ugly. Deutsche Bank also hit hard this week. British, Royal Bank of Scotland, Barclays Bank. And, of course, the French, we've already gone through it. Société Générale, Crédit Agricole, and BNP Paribas. So Meredith Whitney talks about zombie banks. It's important to see also that Bank of America's situation is complicated by a lawsuit against them by AIG about their activities in the mortgage market. Now, the other thing is, remember, on Monday morning of this past week, Standard & Poor's, not content with their attack on the United States Friday night, on Monday, they then downgraded Fannie Mae and Freddie Mac. And if you know the mortgage business, Fannie Mae and Freddie Mac are joined at the hip with Bank of America, because this is the big mortgage business nexus here in the United States. So if you're downgrading Fannie and Freddie, then Bank of America is not far behind. So much so, I think, Meredith Wilson recommends Dodd-Frank receivership for the Bank of America under its head, Moynihan, or maybe without it. Dodd-Frank receivership for Bank of America, says Meredith Whitney. Well, we'll be back in a minute.